Let's talk Lululemon. The shares are slipping from their record closing high as Citi downgrades the stock to neutral from buy, saying markdowns may pressure margins. It's our call of the day. This has been such a darling. Joe, you own it.
I do.
They keep the target at 205, right? They say the stock's at the target, 22.5 times forward earnings. Market expects results to be flawless, and it just has to be too good at this point.
Well, the margin compression would be the concern, and this is a very thoughtful analyst piece. And for someone that owns it, you read it and you say to yourself, yes, if we are going to have margin compression because of accessory, because of outerwear, then I am concerned about the near term. But longer term, that's exactly what you want as a shareholder, Lululemon, to be doing, to diversifying the product away from just yoga and fitness apparel.
It's 68% year to date and 22.5 times forward. Is it just too rich?
No, I wouldn't say it's too rich. They're going to report earnings on Wednesday, November 27th, so you'll get a better read on that. Listen, if the stock pulls down below 200 into the 190, 195 range, I think that's a buy zone. I think something clearly is wrong if the stock falls below 180. I think I would put a stop in there. But fundamentally, the growth story and the target and the 5-year plan that Calvin McDonald has laid out, I think, is one that you want to be involved in as an investor. I think you're going to find in apparel very difficult to find metrics and growth that's going to mirror what Lululemon's been able to give you the last
38 times forward, by the way.
I could live with that.
Okay. Give me some Roku, Jim Lebenthal, initiated by at B of A.
Yeah,
154 is the price target there.
Yeah. So, look, there's been two things to go against Roku here. One is competition and the other is valuation. I think at this point, competition, you got to take that off the table, as the analyst does. For one thing, the fact that they've got Apple on their platform is a way of co-opting competition. You look at their results, and they're just blowing away Comcast or anyone else who's got a similar product. So take competition off the table. This is a fabulous company. The problem of valuation remains. This is a very expensive company that's doing great things. That's why I only own a little bit of it, Scott. And frankly, look, I may at some point be eating humble pie on this, and you'll serve it up and say, hey, Jimmy, you cooked it, you get to eat it. That's true. But what I'm doing here is nibbling at it. I've been nibbling at it. If it comes down, I'll buy a little more because this company is doing great. The valuation just remains an issue.
I think this is endemic of the market where valuation really doesn't matter. I mean, I own Illumina. I'm final trading Friday. I can't justify the valuation, even though it's got a niche business and growing pretty well. So the market's just ignoring valuation. It's going for momentum.
In select cases.
In select cases, true. Actually, momentum has been sold for the most part over the last month, particularly by hedge funds, if you look at the numbers. But so I think it's okay. So until they slip up, the market continues to reward it.
Sorry, I'm going to accent that point, until they slip up. So they'll have earnings in a couple of weeks. If something goes wrong there, you're going to see this thing drop like a stone. And we'll talk about it then if that happens, Scott. But if the fundamental story changes and the company isn't doing as great as I think they are doing, then I might change my position. But right now, I do love the company, and the valuation, I'm just getting used to it.
Okay. I'd love Lulu to miss. I'd love them to miss big.
Yeah.
Because I'd love to buy it. I sold it very early.